evening, everyone. This is Ajit Mishra from Religare Research, and we are back with yet another session of Week Ahead with Religare Technicals. In this webinar, we talk about markets, how the performance of the key indices this week, what we are anticipating in the key indices like Nifty and the banking index for the next week, alongside with a list of stocks that one should keep a close eye on both positive or negative side. So let's get started. And before that, a quick disclaimer that the idea behind this webinar is to share the insight that, what we have based on the, technical charts. It's not a trading or an investment recommendation. So before taking any decision based on the information shared, please check with your financial advisor. Now, markets, for the fourth week remain range bound, but managed to gain nearly 0.5%. Both Nifty and Sensex ended higher by 0.5% each. And when it comes to the sectoral performance, the recovery in the IT pack played the critical role. Initially, it was negative with reaction to the TCS number, but as the week progressed, recovery in the other IT majors played the crucial role and helped the index to gain nearly 3.5%. Then we had metal, auto, energy, and media pack, which gained. Alongside with this, the banking index also managed to hold the critical support, and which helped the index to maintain with the positive tone despite the prevailing volatility and consolidation that we are seeing. When it comes to sectoral stock-specific performance within the Nifty 50 basket, you'll see, a couple of names from the metal space, Hindalco and JSW. But before that, TADA Motors was definitely a surprise for the week. It gained nearly 8%. So broadly, if you see that the stock has been consolidating in a broader range, 370 is basically the lower band of that range. So from that area, we saw that the stock witnessed a very strong rebound this week and gained nearly 8%. And besides the auto and the metal pack, we have TCS from the IT pack and M&M from the auto space, which performed well. But at the same time, within the sector also we saw underperformance, like iShares shed nearly 3%, and from the telecom space, Bharti was down. Titan from the consumption basket witnessed a sharp decline close to around 5%. And Bajaj Finserv continued to read under pressure. Last week, if you remember, that both Bajaj twins were the top losers. And this week also we are seeing this, that Bajaj Finservs remain in the list of top 5 losers within the Nifty 50 basket. And lastly on the list, we have Adani Enterprises, which shed over 2.5%. Now, what to anticipate for the next week? So here's the weekly graph of Nifty 50. So this candle itself explained that what is the current scenario is that last 3 candles. You will see that it's a very limited participation that we are seeing when it comes to the index, means a very narrow range consolidation, which we are seeing that the range is shifting lower. Last week, if you remember, that 17,800, we pointed out this level, precisely that we should hold this mark in case if we have to see some recovery, else the tone will remain negative and we are going to drift towards 17,450. This red line we were referring to is going to be the next major support for the market. And that also coincides with the long-term support on the daily chart. But for everyone's surprise, market managed to hold this level of 17,800 on the closing basis. So intraday, yes, we penetrated this level a couple of times. And 750 to be precise is basically the level which we tested in the December month low. So we are somewhere around hovering around that zone and holding that area so far. Now, seeing like last 3 candles, where are we heading is very difficult to comment, considering that there's despite the recovery in the global markets, we are not seeing any reaction. Earnings season have already started. I would say that the positive results also failed to provide this kind of respite that the markets were anticipating. So in a way, it's a wait and watch mode that markets are currently into. For any sustained recovery, 18,100, earlier it was 250, now we have shifted that resistance to 18,100. We need a close above this level for any further recovery towards 18,250, 350, 500. That is how it's going to be. So as of now, yes, 18,100 to 200, basically that 180 is the area basically where we have pointed out as the immediate resistance. So that would market keeping a close eye on. And then next comes around 18,350. So will that change the mood completely? I doubt. So it means though the consolidation bias is here to stay, is just that the negativity that we are seeing right now means Nifty making lower lows, lower highs. At the same time, we are seeing pressure also across the board. If you exclude a couple of names from the index, every day we see this trend. So in this week, in fact, if you notice that Reliance is down and out, and then we have recovery in the IT majors which saved the market, alongside with rebound in the banking space after that recent decline. So every week we are seeing something or the other on a similar line, which is helping the market to hold 17,800. But that is not enough to change the mood, to change the bias that we are currently into. So the consolidation is here to stay. It's just that to negate this bearish tone that we are currently holding to, we need a close up of 18,180. On the downside, as you said, that 17,800, but precisely 17,750 is what markets currently respecting. Below that, the tone is going to change. So as of now, what our strategy should be is to stay stock specific. On stock specific front, at least this is very clear that stocks are offering opportunities both sides of the market yet. So we are not seeing any directional trend in when it comes to the broader markets. So this is something which is positive, and participants should align their position accordingly. So no any particular sector. When it comes to sectors, only one sector which currently has a very clear cut tone is metals, which is holding around the record highs. The rest of the sectors are basically trading mixed. They are not offering any clear clues. So barring metals, all the sectors are maintaining mixed trends. So the focus should be more on stock specific approach. Now coming to the banking index. So in line with Nifty again, but at least this week it was largely in line with the Nifty. I would say earlier it was very volatile, and I would say that a bit of outperformance and underperformance was there. But this week it was completely aligned. But the challenging part is that here also we are not seeing the decisiveness in terms of like earlier we were forming these kinds of deep green candles, which shows that this sector has potential to do well. But now again with the almost muted closing this week, it seems like that this tone is likely to remain in line with the banking this Nifty index. So upside we have multiple hurdles to cross. So 62, 42, 652, 42, 900. That's the major resistance area that banking is going to face resistance around. On the downside, 41, 500. This low will continue to act as a critical support. So broadly, if you say that 41,500 to 42,650, this 1,000-point range is something that we are currently eyeing. Upside again, like 42,900, as you said, that is going to be the major key resistance. But in the meanwhile, we'll continue to see stocks at least witnessing outperformance. So within the banking pack, like stock like Federal Bank, we have hardly seen any correction. Then we have Axis also that it fell comparatively lower. IndusInd Bank is also holding strong while it's consolidating in a range. In fact, surprisingly, the PSU packs, which usually witness maximum pressure when the market corrects or witness consolidation, this time around they are also holding strong, barring SBI and a couple of small PSU names. other stocks like Can Bank, Bank of Baroda, they are holding strong. So it's more of like, again, in line with the Nifty, maintain stock specific approach, but our preference should be more on the private banking names, PSUs, in case if you are trading, and understand that we are into the earning season also. So the volatility is going to be next level when it comes to the PSU banking counters if you are carrying the overnight position. So I would rather recommend to stick with the private names. They are comparatively less volatile. And yes, obviously we are going to see the reaction on Monday, how the SDFC Bank's numbers pans out, because the results are scheduled tomorrow. So accordingly, we'll see the reaction on Monday, how the banking pack, especially the private one, are going to perform. So meanwhile, a stock specific approach, tone slightly on the positive side, but preference should be on private side. Now, coming to the stock specific positioning that we have, the first on the list is SDFC Life. So life insurance counters were under tremendous pressure, and mostly stocks like we have three listed players here, SDFC Life, SBI Life, and ICICI Pru. So as a disclaimer, we already have a recommendation on SBI Life for our clients with the positional target of 1480. And after a very long underperformance, as SDFC Life has also formed this triangle pattern. And finally, last week, there was a clear-cut breakout. We were waiting whether it should, manages to hold this level or not. So this week, despite the negativity, we managed to hold this, breakout. So this pause is basically offering a buying opportunity to you. And gradually, we expect that it can march towards 640 to 660 levels positionally. So this is one such stock that one can keep on radar. Next on the list is L&T Financial Holding. So this stock, we have multiple things to watch out for. So first, the downtrend is clearly intact, is clearly visible on the weekly charts through this trend line. We are breaking this, but before that, this breakout, we formed a small reversal pattern also. This is inverted head and shoulder, which is a bullish reversal pattern, and we saw the breakout from the same also of late, and now we are gradually inching towards the trend reversal. So it's a very ideal point wherein one can look for accumulation in this stock, and positionally we expect like 108 to 115 could be the area it might inch towards to. Now the market tone is still mixed, so where to look for the shorting trades? So Tata Consumer is the first name that we have on our list. So why we are saying it's negative? So this trend line was offering a respite, in this broadening, consolidation phase with the tone on the positive side. But with breakdown of this trend line, the tone has shifted. Plus, the stock has also slipped below the major moving averages and now gradually drifting lower. So all the parameters are pointing towards the negativity to continue, and this zone 740 and maybe closer to this 720 zone could be the next possible target that it might is towards to. So Tata Consumer on the negative side. And last on the list, Z Limited. We discussed about Z a couple of weeks ago also, and now we are seeing a possibility of fresh breakdown. Earlier it was here, after the failed attempt to cross the major moving averages. Now it's set for a breakdown from the trend line, weekly trend line. So that would further add to the negativity. So Z can be the candidate when it comes to the short trade. So just to sum it up, Nifty, the attempt is there that the bulls are pressing hard to hold 17,800, but for any sustained up move or recovery, we need first a break above 18,100. Then we have multiple resistance to cross, but at least a recovery above 18,100 would change the tone from negative to sideways, with the bias on the positive side. So accordingly, we will see that the stock will also start reacting accordingly. For the banking also, we need a decisive close above 42,900 to change the tone. Otherwise, yes, we are seeing selective participation. The focus should be more on like based on the earning announcement, but one should not speculate. The ideal strategy is to be see how the results pans out, and once the results are out, then you can consider taking a bet. And when it comes to positive or negative stocks, SDFC Life and L&T finance holding is something that we like on the positive side. On the negative side, Tata Consumer and Z Limited. These two stocks look weak to us. So yeah, that is all from the presentation part. Now we will do a quick poll and then we'll start with the Q&A session. So please fill this feedback, and once you are done with that, you can start posting your question using that Q&A tab. Please quickly fill this feedback, and then we can start with the Q&A. And please restrict your question to the sectors, benchmark indices. When it comes to stocks, only stocks which we've discussed during the presentation, that definitely we can answer, but avoid stock specific queries. Please quickly fill this feedback, and then you can start posting your question using that Q&A tab. You can start posting your question in the Q&A tab now. All right, let's start with the Q&A session now. And the first question is from Mr. Emma, and the question is about the IT sector. So IT sector, as we were discussing that top three names, HCL Tech, Infosys, TCS, they have already declared the number. And now we are seeing a bit of breather in the IT majors. And the positive part is that the Nasdaq Composite, which is the tech heavy index in the US, is also witnessing recovery at the same time. So this is something which is positive, but when it comes to stock specific positioning, it's not very decisive trading that we are seeing so far. So barring HCL Tech, both Infosys and TCS before the numbers were reeling below the long-term averages, which shows the downtrend. They have regained those levels, but we need sustainability. So for a time being, I would say that one should not be aggressive when it comes to the IT bet. Selectively, yes, one can look at the IT counters where the numbers are already out. But within these three names, HCL Tech positionally looks comparatively stronger. So next we have Prince on metal and IT. So IT we have already answered, Prince. In the metal space also, like during the webinar itself, we have shared only sector wherein we can see a decisive trend as in means decisive sustainability of a trend is metals. So metal is still holding around the record highs. And when it comes to stock specific positioning, by and large, almost all these stocks are contributing to the move now. Earlier, it was restricted participation because Jindal Steel, JSW Steel, they were inching towards the record high, making newer highs, while rest of the stocks were either witnessing correction or trading in a range. But now Tata Steel, VEDL, Hindalco, National Aluminum, SAIL. But yes, the last two names, National Aluminum, SAIL, they are still comparatively weaker in terms of like the performance is not up to the mark when it comes to the the other stocks, but the participation is there. So that is something which is positive. But again, for fresh buying, I feel that the second rankers like Tata Steel, VEDL, Hindalco, they have a good potential in comparison to JSW Steel and Jindal Steel if the view is short term, because the top performers, they are likely to witness some consolidation now. So the catch up move in these second rankers is very much evident. So Pratima Singh ji have asked about so that we have already shared our view on the key counters, IT majors especially post the numbers. Okay, next we have Mr. Robot on cement space. Cement, yes, Mr. Benjamin is definitely holding strong and within the cement space, but I would stick with the top names in case if your view is short term. Ultratech and Dalmia, they are the top two performers within the list right now, and the rest of the stocks, either they are witnessing consolidation, like tone is positive in some of these names, but it's not looking decisive. At the same time, there are a couple of counters which are witnessing profit taking. So stock like ACC, Ambuja, they are witnessing profit taking in correction in the current scenario. So be very stock specific, especially when it comes to short term view in the cement space. So Mr. Arun have asked whether we can do the webinar in Hindi. So for that, Arunji, what we do is we post a video on our social channels, YouTube and Instagram also, to summarize our view in Hindi for the larger audience. So you can go and check that videos also. It will be like the summary form of what we have shared during the webinar. Okay, so next is Flex Thomas have asked about which sector do you suggest for investment pre-budget scene. So see, this is something which is a very natural question that usually people ask, that is there anything where one can look at, especially from the budget perspective. So I would rather suggest that have a bigger time horizon. Means usually we see that themes which performs well before the budget, they usually fizzle out before the budget, like a week before or maybe around the budget. So in a market like this, wherein we are not seeing a decisive trend in the index itself, and plus when it comes to sector also, there's hardly any clarity. Infra space definitely remains on the government's radar always, and for that reason usually people go ahead and buy L&T, BHEL and all these stocks. And from like agri related space, people look for fertilizer counters, and then we have railway stocks which people look at. My idea is that look for something which you can hold it in case if the view is investment for years and decades. So just on the basis of one day event, yes, it's a very important event and it's very critical, but just because of that event, nothing is going to change when it comes to the overall the company's performance. Yes, that we talk about order book, other things that is there, but on a single day, it's not going to pan out. All these things takes years to reflect. So in case if your view is to buy L&T and hold for 1 year, 2 years, then definitely you should look at it. Similarly, when it comes to fertilizer counters, yes, stock like RCF and some of these names, like Chambal, they have done exponentially well in last 5-6 years. So in case if the view is long term, then you can definitely look at them and accumulate during this corrective phase, but not just because of the budget purpose. Yeah, that is something important question which Roy Abraham asked. Is there any possibility of a budget rally, pre-budget rally, what one can say? So that is what we have shared during the webinar itself, Mr. Roy, that in case if we manage to hold cross 18,100, then definitely there is a possibility that we may see fresh buying interest coming in, and 18,350 to 18,500 could be the area it might test. So whether you call it a pre-budget rally or a recovery, that's up to you. But yes, there is a possibility in case if we decisively reclaim 18,100. See, banking stock we can't talk about, but yes, as a sector, as we have discussed, that 42,900 is something that we're keeping a close eye on. Before that, we have 42,650 as an immediate resistance. So we need a close above these levels for any sustained up move or recovery in the banking majors. So be it ICICI, Axis, technically indications are in the favor that they are likely to consolidate. Before any recovery, the recovery is not going to be very like V-shaped or very strong recovery. This is not the indications are, to be honest. So it's going to be a gradual recovery. So in case if you are looking for investment, then definitely you can continue to look for accumulating these stocks on dips. But from a short-term trading perspective, be very strict with your stop losses. And when it comes to option strategies, always prefer ATM or ITM. Don't look for OTM options for at least when you are buying, and do maintain stop losses based on the spot positions. All right, so we have answered largely all the queries which were related to any sector specific, stock specific. Sorry, as we have discussed during the presentation itself, it's not going to solve the purpose for the larger audience. So with this, we can end the call here. Thank you everyone for joining in. Next week, we're going to join same time. Till then, take care. Goodbye.